Thank you for joining us this evening. We are in the live coverage process of covering the Joe Biden inauguration. Over the next few hours, Astro AWANI will be bringing you live updates, minute-by-minute action all the way from Washington, D.C. We're also going to have a host of analysts covering the kind of coverage that is going to take place over in Washington, D.C. But for now, we will focus a little bit more on domestic matters as Bank Negara Malaysia capped overnight policy rate or OPR unchanged today at 1.75%. Bloomberg market consensus was actually divided with a marginal tilt towards a hold, 12 to hold, 11 for cut. So this marks the third straight time that Bank Negara or MPC kept rates on hold. The statutory reserve requirement was also kept unchanged at 2%, and Bank Negara has extended the flexibility for banks to use their holdings of government bonds to meet the SRR compliance until end of next year. The next scheduled MPC meeting will be on 4th March 2021. Here to discuss this and a little bit more is Jameel Ahmad, dialing in from London. How are you, Jameel?
Thank you very much for having me. Happy New Year to all of you at Astro AWANI from the NAGA community, and thank you again.
Thank you. Let's talk a little bit more about your initial reaction with the OPR rates being kept unchanged. Was this an expected move?
It was expected, but I still would have preferred, from my own point of view, to see an interest rate cut, because I think the Malaysian economy could benefit from it right now, because global economic conditions are not as strong in 2021 that we hoped for. We all hoped that 2021 would be the new beginnings. Perhaps we were a little bit more optimistic than we should have been, because we knew that 2020 was a crisis. Nonetheless, with Malaysia recently going under movement under control conditions and essentially what is localized and national lockdowns, which is similar to what we've seen in Western Europe, including the United Kingdom and places like Germany, France, and so on. Obviously, economic conditions are not very stable right now. It's from a global growth point of view, and because of the lockdown conditions of the national lockdown, this means that consumers are not spending in Malaysia and the economy is not as productive as it could be. And because of this, I still maintain the same bias that we had in our last interview in Q4 of 2020, or I think it was September, October time, that Malaysia could benefit from an interest rate cut, and there's a lot of scope. Perhaps the interest rates could go 50 basis points lower, and it would not make that much of a big difference right now because inflation is still very low, and that trajectory. And of course, with global conditions, we might remain this kind of lockdowns and these kind of global conditions until the end of Q1, perhaps even longer, should more variants of these coronavirus be found. And because of this, there's still a lot of scope and opportunity for Bank Negara to be somewhat more aggressive monetary policy. Of course, that has to come hand in hand with government policy too, but there is opportunities and scope there for further interest rates to ease.
Let's talk a little bit more about what was contained in the MPC meeting minutes. It is said that they believe that near-term growth will be affected by the reintroduction of the stricter movement control orders that was in place last year. But because we're doing this lockdown the second time round, Bank Negara believes that the first quarter of this year is going to be less severe than the first quarter of last year. Bank Negara also expects the growth trajectory to improve in the second quarter of this year onwards. They also argued in the meeting minutes that rollout of vaccine in the coming months will help lift sentiment, and they believe that the downside risks of the outlook remain stemming mainly from uncertainties of the pandemic and potential challenges that might affect the rollout of vaccines. So based on the conversations that I've had with some of the analysts prior to this show, they said that that kind of large expectations of how the vaccines are going to be rolled out, the kind of expectations that external factors like oil supply, consumer demand is going to be buoyant, is relying heavily on the decision that was made today. Because of that, you believe that it's going to be a bit of a long shot on behalf of the MPC to hope that the second quarter will be a little bit better than the first quarter. What's your opinion on this?
It's a long shot because I think that the emotional toll and confidence, the confidence from going from lockdown to, the first lockdown was kind of like, okay, this is new for all of us, this is a big shock. And then we all got our hopes up that as we were coming out of lockdowns, and I'm talking on a global picture right now, things will slowly get back to normal. But what we have seen instead is cycles. It's like going on the roundabouts where things have been easier, then they get more difficult again. And this all impacts sentiment. So I think that, yes, it is correct that this lockdown will not be as bad economically it's the first one, because that was a catastrophe in terms of an economic shock that none of us have seen in our lifetimes. And in some economies, they haven't seen them in centuries. But nonetheless, that weighed on people. And now this is weighing on people again, which is going to make people more cautious, more concerned. Of course, real incomes have really fallen over the past 1 year. There's very few that can say that their circumstances, their conditions are better than what they were 1 year ago because of the economic catastrophe on a global level. So I think that, yes, we could still see better growth in 2021. And by all means, we should see better growth, but we can't hold our hats onto the, we're going to grow in Q1, we're going to be much better in Q1. Yes, if you look on headline, because you've had a shock and a catastrophe, so things have gradually got better, but we're going to not see a straight curve like this. We're having ups and downs, and that's as a result of the cycles and the roundabouts are going back and forth through lockdown conditions. Of course, that's completely understandable on a health level, but on an economic level, this is causing quite a lot of, it's causing big trouble.
Negara believes that the policy stance does provide some accommodative features inside the economy. Do you believe that that's the case now that it's still held at 1.75?
It is. That definitely is the case, and I can understand why they're saying it's accommodative, but there's more conditions and there's more flexibility that can still be taken, not just through lower interest rates, but nonetheless, because interest rates are still at least close to 75 basis points above what the inflation trajectory is. Obviously, with economies on lockdown, inflation is not going to be going mildly that significantly high in the early part of 2021. There still is opportunity there for low interest rates, and that's something that can benefit businesses, and it will not provide the exact same level of cushions and feel-good factors as the government stimulus packages and what help the economy can provide it, but it does at least provide a little bit more hope for business conditions, through maybe if you have to borrow money or if your interest rate payments become less costly to your own balance sheets. There's still a lot that can be done to provide more help and support to the economy. And we're seeing this again, I'm not speaking just Malaysia, we're seeing this on our global conditions too. For example, United States, one of Joe Biden's first acts is to try and get this 1.9 trillion stimulus package passed through the US Congress and the US political system. This means that the cost to the US economy has gone close to $4 trillion. That's how much this pandemic has cost. And that's why there's always this view that something's better than nothing, but there's still always more that the market wants. And the market would also enjoy more lower interest rates in Malaysia because there is potential for them to be squeezed lower anyway.
Speaking about inflation rates, in the meeting minutes, it was discussed that headline inflation rate is expected to be in negative territory for Malaysia for last year. And for this year, the headline inflation rate is expected to trend upwards, but ever so slightly. There's even talks that the headline inflation rate will continue to remain negative for this year. And because of that, do you feel that when we look ahead towards the next meeting, which is going to take place in March, they might cut at least 25 basis points to 1.5? What do you think on this?
Yeah, again, I think that there's scope to go all the way to 1.25%, but that was the same view that we had when we last spoke in September and October and November, Ibrahim. Nonetheless, inflation likely will trend a little bit higher because we've seen somewhat of an increase in oil price sentiment. But talking on oil price first, before we go into the other aspects of the statement, oil prices are still only at the same level as 1 year ago. So the increase in the oil price has not been that significant. And when you have lockdown conditions, when you have concerns over global growth, and when consumers are not confident to spend anyway, you have lower inflation projections, which is why that we might go above 1.1% in inflation, but we're not going to go anywhere near where the interest rates are. And that would cause a big shock to the economy if that were going to be the case. But that's not a risk right now, which is why the longer Malaysia stays in these lockdown conditions, the timer just ticks further towards a direction that should be or likely will be an interest rate cut at some point. And I wouldn't be concerned over this on a market or a currency fluctuation standpoint. It will provide more support to the economy. And if Malaysia does stay under further lockdowns, then the pressure will also increase. So there's going to be more fiscal and monetary stimulus that has to come hand in hand.
Fantastic. We'll go for a short break. When we come back, we'll discuss more on the situation in Malaysia, but in the context of the US presidency that is going to take place very soon, in just a few hours. Stay tuned with us. This is Astro AWANI.